Good morning, good morning. A very happy Monday to you. Welcome to today's episode of Morning Well. We'll touch upon three things: bank earnings, China GDP expectations, and the week ahead. Stocks fell on Friday following an especially weak retail sales figure for December, which indicated that the economy is in deep trouble while the nation awaits for greater progress on vaccinations. The Commerce Department reported December retail sales figures on Friday. Overall sales fell 0.7% from a month earlier, worse than the 0.1% decline economists expected. November sales were also revised lower, now showing a drop of 1.4% versus the previously reported 1.1% decline. The Dow was lower 0.6%, the S&P 500 was lower 0.7%, and the Nasdaq fell. As we get started in Asia, the dollar is little changed against the G10 pairs in early trading. Asian equities will look to turn things around after the US stocks extended a global sell-off on Friday. In terms of sectors, energy and financial shares led the S&P 500 into the red as oil retreated from 10-month highs and banks reported. Treasuries rose, pushing the 10-year yields down below the 1.10%. Gold weakened. US equity and bond markets are shut today for the Martin Luther King Jr. holiday. Bank earnings got off to a rough start. JP Morgan's earnings beat. The bank posted a fourth quarter net income of about 12.1 billion. But it said credit reserves of over 30 billion continue to reflect significant near-term economic uncertainty. Citi's net income was down and its 7% rise in fixed income trading fell short. Wells Fargo missed on revenue and net interest income and is still struggling to cut costs. All three closed in the red on Friday. JP Morgan fell 1.8%, Citigroup declined 6.9%, while Wells Fargo plunged 7.8% after saying revenue fell almost 10% from a year earlier in the fourth quarter, which was worse than expected. JP Morgan Chase said Friday that it ended 2020 with 1.4 trillion in cash and marketable securities, which it said it is some 450 billion in excess of what the regulators require. Across Citi, PNC Financial Services, JP Morgan and Wells Fargo, which all reported earnings on Friday, cash assets at year-end represent about 15% of their total assets, well up from less than 10% a year earlier. Behind this is a wave of deposits driven by the Federal Reserve's balance sheet expansion as well as the fiscal stimulus. Large US banks' loans are now only about 56% of their deposits, down from about 70% before the COVID-19 pandemic. This is according to Fed data. So from a bank's perspective, the lesser you lend, the lesser net interest income that you earn, which is basically the main source of income for many of these large consumer banks. Meanwhile, these banks' profits were boosted in the fourth quarter by a reversal of credit costs via reserve releases, which investors will want to see a lot more in 2021. JP Morgan cited the macroeconomy and corporate borrowers having lots of liquidity as major drivers for its release in wholesale lending. It held reserves flat for credit cards. Higher earnings in the fourth quarter could help allow banks to increase buybacks in accordance with the Federal Reserve payout formula, which ties them to average quarterly earnings. JP Morgan said that it now has net capacity of about 4.5 billion in buybacks in the first quarter, part of the 30 billion the bank's board authorized following the Fed's December stress test results. How much of that it might actually do remains to be seen. However, JP Morgan warned that there are thorny questions about how much capital it would need under evolving regulatory requirements. Moving on to some GDP data that we'll be looking out for from China. China's recovery probably powered ahead in the fourth quarter, with the GDP set to post the fastest expansion in 2 years. Consensus calls for a 6.2% growth. Monthly activity indicators are also due. Industrial production for December is expected to expand at 6.9% pace, which was slightly lower than the previous month, while retail sales should tick higher with a 5.5% gain. The week ahead, we'll be looking out for central bank action across the ECB, BOJ, which may hold on Thursday, but may signal downside risks to the economy. So is the case with Canada, South Africa, and Brazil. The holiday shortened week in the US kicks off on Tuesday, with Janet Yellen expected to easily win confirmation for Treasury Secretary a day before Joe Biden's due to be sworn in. In economic data, there are a trio of reports on housing market plus jobless claims on Thursday and PMIs on Friday. Bank of America, Goldman Sachs and Morgan Stanley are next up. In terms of US bank results, Bank of America's outlook will be key, while Goldman's investors are eyeing the investment banking pipeline and updates on strategy. All are expected to have benefited from healthy trading activity though. Other earnings that we'll be tracking on the tech and semiconductor space: Netflix, Intel, IBM and ASML; consumer and health, P&G, United Health and Gilead; on the transport side, United Airlines, Union Pacific and JB Hunt; on the oil services front, Halliburton, Baker Hughes and Schlumberger. Lastly, on Euro area and UK PMIs, which will be out on Friday, may show deterioration. This week also brings Germany's ZEW survey, UK inflation and retail sales, and at least 2 speeches from BOE's Andrew Bailey. That's the update. Stay safe and healthy, and I'll speak to you tomorrow.